Hey everybody, it's Hari Swaminathan. Today is March 12th, 7:52 a.m. pre-market time. The markets are really at a very unique point right now, and so if you're thinking of taking trades, you have to take a look at the larger picture, which is the macro picture at this point. Let's just review. So this video, I just want to review what all is going on in the macro asset classes. Granted, there are many stocks that are actually at fairly attractive levels, including Apple, including Facebook, Tesla for sure, and even Netflix. But before we get there, we need to understand what the macro situation is doing. Here we have a 3-month daily chart of the S&P. Let me change that to a 1 year daily chart. So gets a little busy. Let me change it to a 1-year weekly chart. All right, so this is good. You can see if you look at it from a slightly longer term picture, the S&P is still on an uptrend. So until proven otherwise, we are definitely in a bullish trend. However, you can see in the last couple of days, we've dipped below the 20-day moving average. But still, it's definitely a graph from bottom left to top right. So until proven otherwise, it is a bullish market. But what else is going on right now? Some of the things is, first of all, let's take a look at the bond market. Now, this is where things are getting a little crazy. So the bonds hit a high of 163 about a couple of weeks ago, and it's inching back towards that level. Okay, so when bond markets are at all-time highs, this is an all-time high, by the way. So we are approaching all-time highs on the bond market. So which means money is pouring into the bond market. Generally, that's a cautionary time for the stock market because so the stocks and bonds, of course, compete for capital. Now, the other stuff that's going on is very interesting is the dollar index, and that is going just really crazy. You can see that this is hit a high of 100 earlier this week. So that's a very high level. It is not an all-time level. I believe over back in 99, 2000, it did go up to about 110 or maybe even 120. But regardless, so the dollar is really strong, which means the other currencies are generally going to be weak. So if you look at the Euro ETF, it is getting hammered, and it's really at a 11, 12-year low. And so, that's something that we have to keep an eye out on. So as long as the dollar index is going higher, it means money is coming into, there's more demand for the dollar. So money is coming into the dollar, and that would make sense because the bond markets are also going up, which means foreign money is coming into the US, buying the dollars to get into the bond market. So that's really what's going on a macro level. Oil doesn't seem to be stabilizing. It's back down below the 50 level. And if you look at it from a trading aspect, any bounce right now can be shorted on the oil market. So that, these are all the things that are going on in the macro level. VIX is at 17 almost, still not very high, but it could go higher. In fact, the S&P has quietly come down about, I would say, almost 4% from its all-time highs, and it's done very quietly. Yeah, it's come down from 2117, so it's at 2044. So that's about 4%, and it's done. Yes, granted, last Friday was a big massacre in the markets, but it's generally done it in a fairly quiet manner. So, that's 4%. It could go down another 4, 6%. Most people expect a correction to come in. And so we do have to watch out if you're taking bearish trades. However, until proven otherwise, we are still in a bullish market. It's just a time to be a little cautious. If you do take bearish trades, keep it on a very tight leash because, you might have to turn that trade around or exit that trade fairly quickly. But the point is many stocks are at very attractive levels. So if you go look at, Apple, although Apple doesn't tell you that it's at a low point, but it's Apple, and it's come down from 133 to 122. So that's almost a 10% drop right there. Google is up and down, so I wouldn't make any judgments on Google. Netflix has definitely come down from its post-earnings highs of about 490, so that's pretty good. Then even Facebook, I believe, has come down quite a bit, from 82 down to 77. Tesla has definitely come down from a lot higher, so 291 to 193. So this is a very attractive level for Tesla. However, you don't want to get into the long side until this market situation clears itself out. So a lot of stocks that are approaching very attractive levels, but we need to be cautious because this, if the S&P goes down another 4 or 5%, you'll see that all of these stocks will obviously go down some more, and so they will provide actually better buy points. So anyway, that's something to watch out for. We definitely are in a transition market, could go either way, so we have to watch it over the next couple of days. Thanks.